get to Nick Twidale now from FP Markets. He joins me to discuss currency moves in the wake of the Fed's decision. But Nick, let's just start overall with what we heard from the Fed, because it was kind of a little bit opaque in some sense that they've kept rates on hold, but they haven't closed the door on further hikes. But they've also sort of indicated maybe we're done, and the 2-year yield is sort of showing perhaps we are done.
Yeah, I think so. I think it was an interesting sort of statement we got from Jerome Powell, and the extra information that we got from him as well. It's almost like they've used the US Treasury yield rises that we've seen, so they are being priced in as an extra rate hike, or maybe two for some people. The Fed sort of jumped on the back of it, it feels like, and then what they're saying is like, okay, well, these should now be coming through to data, and we may not have to hike, but we're still ready to hike if we have to. So it was a real sitting on the fence moment for me. I think we're going to go back to, I think now we're going to be looking at those bonds even closer than we have been in the last couple of months, and we've been looking at them pretty closely.
Yeah.
And also data again, because if you look at the US data this week, it's not really falling back too far. I think ADP was a little bit lower yesterday, but the other two jobs prints we've got have actually been sort of showing that resilient economy that the Fed's been concerned about for a long time. And of course, we've got non-farms coming up at the end of the week. I think if non-farms comes out stronger and we still see this resilience in the labour market, then we'll start to see a change of rhetoric again from them. But at the moment, we've got to trade what we see. They were, I wouldn't say more dovish, I would say less hawkish slightly. And we've seen a decent market reaction. How far we get from this reaction, I'm not entirely sure. It may only last a session or two. All
right. We talked there about the movement in the bond markets. Of course, we're watching very closely what's happening in bonds here too. Your thoughts on what we're going to see? Is it next Tuesday from Michelle Bullock?
Yes, it's very interesting. I think it's going to be a live RBA, and unfortunately for most of us, only half an hour before the real event of the day.
We're not going to be paying attention. Michelle,
spoils it for us currency traders, doesn't it? There's got to be something done about that.
Yeah.
There could be a chance that they go. I think she's not pulled back. She's been probably a little bit more dovish than we've had previously, but I think the pressure is on the RBA. So if we don't get anything, and they might not go this time, I think we'll certainly have a hawkish leaning from them, and I think that's going to add some strength to the currency, and also maybe see those yields kind of come in a little bit better bid as well.
Yeah. All right. Well, let's talk about the currency moves then, and specifically the dollar index, obviously moving after the Fed decision, but the Aussie had its worst month in October, or 3 months in a row, down 1.5%, something like that.
Yeah, it's had a shocker, hasn't it?
Yeah.
And it's been grinding lower as the dollar's been moving higher. And that 1.5% is pretty bad, but it's still grinding lower. It's not really been racing. We haven't seen its usual real massive slips that we sometimes see from the Aussie. But yeah, you can see from the chart here, we've found a bit of a base down there, sort of near that 63 level. We got a decent bounce, right? We're back above, and we've broken through sort of that short-term resistance level. Next level on the top side comes in around about 65 cents. If we can get through there, then it pushes a little bit higher. And a lot of this will be dependent on what we were just talking about, is the dollar side of the equation.
Yeah.
But yeah, the Aussies had a real tough time on the crosses as well. So it's going to be interesting to see where we go. Once again, we've always got to bring China into the equation.
Well, indeed. And that stimulus effect, what kind of impact does that have then to the currency?
I think we've got to look at how long that stimulus lasts for, and if we're going to get any more. And it does feel like we're going to have more trickle effects, or even greater than trickle, from China. That will help the Aussie as well, because the data coming from China is not great. Sometimes it's popping a little bit higher, and we've got some reservations on that for the other stories we're seeing from China. So I think the Aussie's in a very interesting position at the moment. It will be dictated by that dollar side of that pair in particular. But I think until we start to see signs of global growth, and that will depend on China, and it will depend on where we're going on, there's still these sort of recession fears sitting at the back of everyone's mind. Until those clear, and probably let's not forget the geopolitical risks we've got at the moment, the Aussie will struggle to rally too far.
All right, let's look at the yen, because of course, obviously, intervention watch has been very, very key. You've provided a chart there too, where we see the yen trying to push through that 150. What's your thoughts there?
Yeah, I think we chatted about, they've been talking intervention last time I was on, and it did break through that 150, and you can see there's congestion around that level, and it's topped out, funnily enough, near that October 22 high. It's come back off. We've had talk of intervention as well. It's funny because we've kind of seen two different central banks in the last week. We've seen the Fed sort of say, well, we've used yields are moving, so this is great. Obviously, yields get tumbled, and we've seen the BOJ come in. From the weeks before, they're concerned about the currency, and of course, their move from the central bank meeting means we see a massive weakening in the yen. So. It's going to be interesting. I think volatility is going to be king for the yen. It wouldn't surprise me if they are. We've certainly heard they were sniffing up at those levels, and it wouldn't surprise me if they start to layer into the market if we do break higher. But
what's the interesting part about the fact that October and October seem to be the same all the time with the yen? Is there anything to read into that? Or
I think they always say October is one of the most volatile months, and it comes on the back of that whole northern hemisphere summer type thing. Yeah. But I don't know what it is with the yen, but every yen trader I know.
Conspiracy theories here on Ausbiz.
Great, yeah.
All right, let's talk about the euro. Obviously, Bank of England in focus in terms of the pound, but with the ECB moves as well last week. What are you seeing there?
Yeah, I think I threw this chart in. Went on some longer date charts because they're quite interesting that we're seeing how well that downside trend line's been respected, and I think a lot of the technical guys out there will be looking at it. It has been battering against it to the downside on a few occasions. So for me, for the dollar bulls out there, and I'm still leaning to that side of the equation until we see data turn, then I think there could be a break to the downside in the euro. That's obviously a longer term play. At the moment, the trend is back up on the short term, but we can probably sort of I'd be kind of fading towards the moving average that we've got on there, and certainly up towards that 108 level. I think I'd like to fade those sort of moves, but it's going to be down to, I think it's still really Fed dominated. It's that the global market's always dominated by the US, but what we're seeing from the Fed data out the US, that's where the euro is going to move next.
And we don't have a chart on the pound, but I did mention the Bank of England handing down its decision. Will low rates ever return is kind of the key point there, and what does that mean for sterling?
I can't think they will. I think we've got to, once again, they're sitting on the fence again, the MPC. So it's going to be very much data dependent for them. I don't think they're going to go today. I think we're going to see plenty of volatility in cable, which we always do anyway. And it's going to come down to what we see from the statement, and then of course the governor's speaking later as well, Andrew Bailey. So I think we're going to get less movement around the actual rate decision and a lot more around the press conferences and the statements, which seems to be a bit of a theme at the moment.